Hey everyone, welcome back to our channel where we make taxes sound simple, not scary. Today, we're talking about something that affects many of us rent. Whether you're paying it or receiving it, there are tax rules involved. Now, you might have heard about something called TDS on rent. Sounds complicated, right? Let's break it down. TDS stands for Tax Deducted at Source. Think of it like this: when you make certain payments, a small part of that payment needs to be set aside and paid directly to the tax department by the person making the payment instead of the person receiving it. It's like collecting tax right at the point of payment. Okay, so when does this apply to rent? There are two main scenarios for paying rent to someone living in India, a resident landlord. First, if you are a business entity, maybe a company, a partnership firm, or even an individual or Hindu undivided family, a HUF, whose accounts are subject to tax audit. If you pay rent of more than 50,000 rupee per month, you have to deduct TDS. Here's a quick point. The rate for this is typically 10%. You need a special number called a TAN, that's a tax deduction and collection account number, and you deposit this TDS every month and file quarterly statements. You also need to give a TDS certificate to your landlord. Now, what about individuals or HUFs who are not subject to a tax audit? This covers most of us who are renting a home for personal use. Let's take a moment here. If your rent is more than 50,000 rupee per month, you are also liable to deduct TDS. Sounds familiar? Many people don't realize this. The rules for you are a bit simpler. You don't need a TAN number. You can deposit the TDS using your PAN card number. And you don't have to do it every month. You deduct the TDS at the end of the financial year or when you vacate the property, whichever is earlier. Here's something important. The rate of TDS for this group was 5% earlier. But from 1st October 2024, this rate has been reduced to 2%. This is a change to note. You must also provide a TDS certificate to your landlord. Let's quickly recap. If you are an individual or non-tax audited HUF paying more than 50,000 rupees a month in rent to a resident landlord, you deduct TDS at 2% from 1st October 2024 once a year or at the time of vacating using your PAN. Businesses and tax audited individuals HUFs paying over 50,000 rupees a month deduct at 10% monthly and need a TAN. You might have seen this happen in real life. The person paying rent is responsible for deducting this tax. Now, think about this. There's been a recent proposal in the budget 2025 to increase the annual limit for TDS on rent from 2.40 lakh rupees to 6 lakh rupees. What does this mean? It means fewer rental transactions will cross this higher annual threshold. So fewer small taxpayers receiving smaller rental payments will be impacted by TDS being deducted. This aims to simplify the tax deduction framework by raising the threshold. Here's a quick point. When we talk about TDS on rent, like under section 194-I, there are generally no extra charges like education cess or secondary and higher education cess added to the TDS amount. Okay, that covers rent paid to residents. But what if your landlord is an NRI, a non-resident Indian? The rules are different here. If you pay rent to an NRI landlord, you, the tenant, are still responsible for deducting TDS. There is no minimum threshold amount for this. Even if the rent is below 50,000 rupees a month, you might need to deduct TDS. The rate of TDS for payments to NRIs is generally higher, around 31.2%, including cess and surcharge. You absolutely need a TAN for this. Deposit the TDS monthly, file quarterly returns, and also file forms called 15CA and 15CB. Now, think about this. What happens if you, the tenant, forget or fail to deduct TDS when you should have? The responsibility of deducting is yours. If you don't, and the NRI landlord receives the full rent without TDS, then the NRI landlord is obligated to pay advance tax on that income. If they don't, they might have to pay self-assessment tax along with interest when filing their tax return. This is something most people get wrong. For NRIs receiving rent, they typically need to receive it in an NRO or NRE bank account in India. While it's possible to send this money back overseas, called repatriation, there are rules. Rental income is generally considered current income and can usually be sent back without strict limits provided tax compliances are met. Capital gains repatriation from NRO accounts has a limit, currently $1 million per financial year. Let's quickly recap. Rent to a resident, threshold, different rates and rules based on pair type, PAN or TAN. Rent to an NRI, no threshold, higher rate, always need TAN, extra forms. Moving on, let's talk about GST on rent. Yes, goods and services tax also applies to rental activities, as renting property is seen as providing a service. However, there's a big difference depending on the property type. If you rent a residential property and it's used or intended for use as a place of residence by a family or individual, it is exempt from GST. Simple enough. But if you're renting a commercial property like a shop, office, or warehouse, that is not exempt. Renting out commercial property attracts GST at the rate of 18%. Here's a quick point. Small taxpayers, those with an annual turnover of less than 20 lakhs rupees, are generally exempted from GST on their rental income, even from commercial properties. So, to sum up the rent part, TDS on rent for residents depends on who is paying and the monthly rent amount. The rate for individuals non-audited HUFs is now 2% for monthly rent over 50,000 rupees from 1st October 2024, deducted annually or at vacancy. The annual limit for TDS liability might increase to 6 lakh rupees per year as proposed. TDS on rent for NRIs applies regardless of the rent amount at a higher rate of around 31.2% and requires monthly deduction and specific forms. GST on rent is applicable at 18% on commercial property rent, but is exempt for residential property rented for residential use unless the taxpayer's turnover is below the small taxpayer limit. Knowing these points can save you a lot of confusion and potential notices. Now you know what most people don't. If it's still confusing, listen to this part again. And please, share this with someone who needs to know. Thanks for watching.